Anurag, what do you make of Microsoft's numbers? All in all, look solid.
Yeah, I mean, I was surprised that the total revenue growth was much better than what the street was expecting, and even what I would say the company had guided. So from that point, it's very good. Shows that software spending is still strong, technology spending remains strong. But the big deal is not so much these results, but what kind of guidance do we get on the conference call? I think that really is where the stock will hinge tomorrow, as well as I would say other software companies.
What is the growth story then? I mean, when they talk about sort of what the rest of the year, and more importantly, what 2023 and beyond looks like, Anurag, what is that growth story for Microsoft?
See, from our point, growth has to slow down. It's just, I guess common sense at this point that when you have been posting 16% growth in constant currency for the past 4 or 5 years, going into next year, which is a very tough year for just macro conditions, you would expect a drop down. And we think that's going to be somewhere around 200, 300 basis points. But then we also expect the year after all of that to bounce back and bounce back very strongly.
Anurag, Microsoft earlier this year was pretty much the first company to warn us about dollar strength and the impact of foreign exchange. I'm going through and they are very clear on what was a 6 or a 14% that could have been up a lot more without strong dollar. Walk us through again how concerned or not you are about dollar strength on these multinationals.
So from an enterprise software company point of view, it's not that big of a deal because these are contracts that are written in the local currency. Mm-hmm. It's just more of a translation point of view. Now, let's see what happens over the next 6 months. If dollar just remains stable where it is, we think this headwind becomes not a mute point after that. And then 2024 looks to be okay. But if the dollar keeps on strengthening, at some point, international companies or companies outside the US will say, do I really need to upgrade at this point, or do I wait till I see a more favorable currency for myself? Because a lot of these products are initially, they are priced in euros or GBP, but the base rate is still in dollars.
This, of course, is a Satya Nadella that speaks about helping customers do more with less. Are you expecting anything on Microsoft doing more with less, Anurag?
Yeah, one of the things you have to think about is one of the biggest issue facing all companies right now is a massive shortage of technology workers. And software is one easy way to increase productivity. So if you can't figure out a way to, cut down your IT costs, the easy way is you can port some of this to the cloud, less maintenance, and potentially less total cost of ownership in the long run.
Some of the headlines that stick out to me is they're opening up a slideshow on the website and talking about rising energy prices are boosting the cost to deliver the cloud. They're talking about the cloud and energy prices all in the same slide. How do you think about the value proposition of the Microsoft cloud?
So when you look at it, one thing is very clear. I'm surprised that their their operating margins held up very nicely despite this rising energy cost. AWS also announced last time their operating margins fell because of rising energy cost, because it impacts their data centers. But now here is the fun part. When you have these guys having an impact on energy, think about all the corporate data centers out there for all the corporations and enterprises. It's better for them to shut down those data centers and migrate those workloads to one of the 2 clouds, or one of the 3 clouds now, with Google become a very third large big player. And I think this will continue to drive cloud growth, even though we may see some pressure on margins in the near term, but in the longer term, this is a highly scalable business model, very much like the Visas and the MasterCards of the old world.
What about the cost structure? When we talk about, Anurag, some of the commentary that we've gotten out of other companies, if they haven't explicitly said that they're going to reduce headcount, they've certainly sort of intimated this idea that they maybe need to tighten the purse strings a little bit more as we move into whatever sort of economic conditions we're in right now.
So I think you can assume that for most companies, they have hired very aggressively over the last 3 to 4 years. So if they either slow hiring or even take some minor cuts, I won't be surprised about it. But frankly speaking, when I look at the unemployment rates for all technology workers, whether it's database administrator or overall, we are over full employment for many years. I don't see anywhere we're going to be able to fulfill the shortage of technology workers. And that normally leads to 2 things: either move products to the cloud, or you outsource those jobs.